In this video, we'll be taking a look at the future analysis to get you prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. And if you're interested in learning to trade Forex like professional, check out our complete Forex training course on Udemy. I have the link attached in the description below as well. Last week, we talked about the possibility of gold heading higher, and we anticipated a bullish move from these lows. Unfortunately, we didn't go as close to these lows as we expected, but we did get a consolidation. I know we also took a look at another scenario where we take out this area of value, and that happened, followed by a retest. That would have been the opportunity to go long, going for approximately, let's say, 600 to 700 pips or 500 pips as the case may be. So this week we'll be taking a look at the current market structure to determine how we're going to get in on this trade opportunity for the week ahead. Mind you, I really do think there's a good chance we open the market with a bullish gap on Monday, right? That's because of the downturn with the US economy right now following the Friday's economic data. So first case scenario will be possibly waiting for a retest of this area of value, followed by a move to the upside in continuation of a bullish move. If this happens, your entry would want to be after the bounce of the retest. Stop loss is going to be underneath the retest. So when you go in, put your stop loss here, entry is going to be around price levels, and you can trail your positions as we go higher. Alternatively, I really do think this isn't the best option. So the best option will be waiting for consolidations around these price levels, right? Not necessarily a retest, but a consolidation followed by a bullish move, which will give you some sort of a confirmation of a bullish continuation pattern. So this is my best case scenario right now, but following the economic situation of the United States with the news on Friday, there's a very low probability that this is going to happen, though this is going to give you a better risk reward ratio with your trades. So right now I do think there's a good chance we continue to head higher. We just blast off opening on Monday, so just go up as high as possible. So this is not the scenario where we want to get in on trades, because then you would find it difficult to find possible price levels to set your stop loss. So that's the reason why I wait for pullbacks. And for me, we may get a small pump to the upside, but I'm going to wait for either a retest or a consolidation around this area of value, above this area of value, for us to go long. So this is my bullish case scenario on gold. And meanwhile, just as much as we're talking about the bullish move to the upside, we could also get a bearish move, significant bearish move to the downside. So another price level to watch out for will be this trend line. So this could potentially lead to another bounce to the upside, right? So just in case this area of value, so this resistance level doesn't hold, we could see price move into this area of value here, where we can also look for opportunities to go long. Or lastly, we could come as low as these price levels into this trend line for a bounce to the upside. But I don't think this is going to happen right now, because if you pull up the moving average, so like I always like to follow up with the moving average, because it acts as a very strong area of support being in a bullish trend. So there's a good chance the moving average might have crept up to these price levels, right, where we could potentially see a pop to the upside, followed by a retest of the moving average before heading higher. So this moving average should be some sort of a signal as a baseline for you to either go long or go short. So if this moving average holds, then you want to go in on a bounce. If it doesn't hold, then you want to go in on a bearish breakout to the downside. So if we do get a retest, wait for a short bounce or a consolidation, and watch out for that breakout. So if we break out from this moving average, then you want to go short. But the problem with this is that we have more area values that contends with this price level, that's going to make it difficult for gold to fall straight through like knife cutting through butter, right? Because we have this trend line here. So the moment you get in on a short position over here, and who knows where the moving average is going to be by the time that happens, if you go short, then you have this trend line to prevent price from falling lower. So that's why the risk to the downside is not as enticing as the risk to the upside, right? Because for one, we're in a bullish trend, so you want to go long, you don't want to go short. But if you decide to go short, watch out for these levels, because they are potential price levels that could see us heading higher, even though we break below this moving average. So that's it briefly for gold. If you have questions, please leave your thoughts in the comment section down below. I know it may not sound too clear as to price levels to pick your entry, but the best case scenario would just be waiting for a consolidation over here and watching out for a buy opportunity. instead of trying to go short. Or you wait for a retest of this area value followed by a move to the upside. So these are the two major case scenarios in which I'm going to be going long on gold instead of going short. As for short positions, I only talked about that because of the BS we have in our community. But for me, I'm going to stick with the bullish case scenario and go long when the opportunity presents itself. Moving on, we're talking about crude oil. So crude oil real quick. Last week we talked about the possibility of price taking out this area of resistance. We did take the area of resistance out and crept up to this area of value, which gave us approximately, let's see, 150 pips or so. Yeah, so yeah, approximately 150 pips as case may be. So if you got that, kudos to you. Right now, I do think we may see some more bullish momentum on crude oil, but not after we at least retest this area value. So if we do retest this area value, followed by a bounce to the upside, then you want to go long. Stop loss can be placed underneath the retest. Entry immediately after breakout the consolidation from the bounce. First take profit target could be around zero value. Second take profit target could be as high as these price levels, you know, as long as you trail your positions as you go higher. So if you are willing to hold for that long, then I do think there's a good chance this plays out like this on crude oil. Meanwhile, if we do not get a bounce, right? So if we do not get a bounce around this area value and this area value fails to hold, then you should see some sort of price action like this, moving to this area value, consolidation, then a bearish breakout to the downside, right? So this is another very possible case scenario that could happen if this area value doesn't hold. In this case, you want to go short. I would definitely be going short. The reason is because crude oil over the past few months, so let's say since 2025, right? 2020 January 2025, yeah, we've been in a solid downtrend and we just, you know, got halted at this area value. So if we do get a, you know, move into this area value with a consolidation without a very good bounce to the upside and it follows up with a bearish breakout, then I am going to go short. I'm going to go short immediately after the breakout. Stop loss is going to be above the consolidation before the breakout. First take profit target obviously is going to be around this trend line. Then I'm going to trade the rest of my positions to go lower if we do take out the trend line, or just in case we take out this trend line. That's it briefly for crude oil. If you're too scared to take a position around this area of value, you could potentially wait for something like this. So see how price reacts with this area of value, then watch what it does here. If we do get a consolidation around this price levels followed by a bullish breakout, then this could be another confirmation for you to go long. Stop loss is going to be underneath the consolidation is the breakout, and your take profit target is all the way up at this price levels. So this is my bullish and bearish case scenario for crude oil. If you have questions, leave your thoughts in the comment section down below. If you disagree with me, please let me know why, so I can at least learn from you, right? That's it briefly for crude oil. Moving on, we're talking about Nasdaq. So Nasdaq, this hurt me a lot last week because I missed a very good trade opportunity on this. Not necessarily Nasdaq though, but on US30 and US500, I followed up those charts but messed up by not entering. But right now we're taking a look at how we can spot our good trade opportunities for the week ahead. Mind you, Nasdaq, US30, US500, I do think that they're going to open up with a very good gap on Monday. I may be wrong, but that's just my anticipation. See, similar to something we had over here, right? So we could see some sort of gap with an extended price decline to the downside, right? Maybe later within a week we see a recovery, but for now we're just going to talk about the chart as it is without any anticipation of potential gaps. So for Nasdaq, we're slowly creeping towards the area of support. Now this is a very good support. Why? Because if we take out this area of support, it means Nasdaq is heading way lower than we anticipated, right? So just to pull my chart back here, so we may be going as low as these price levels if this support fails to hold. And if you take a measured price movement, this will give you approximately 700 pips, which is, you know, Christmas for us, right? So how do we trade this? First case scenario, or first thing to note, is you don't go long on this chart. This is not a chart to go long. You don't want to be the smarty pants here and, you know, try to go long because you feel we're going to be trading around a good area of support. No. All you have to do is look for price levels where you could take potential, sell trade opportunities by loading up those entries if those opportunities present themselves. I think they will, because if you take a look at the RSI, we're currently oversold, extremely oversold. I'm going to get rid of this trend line. Extremely oversold, so it means there's a good chance we may be heading higher soon, right? But heading higher doesn't mean the market's going to turn bullish and we all go up and make tons of profits. It could simply mean giving the market a little bit of breather for us to then go down even lower. So this is how you trade this. You wait for price to get into this area of value. If it does, then you wait for a pullback. So that pullback could retest this area of value. If we do retest this area of value followed by a bearish move to the downside, then that should be your opportunity to go short. Meanwhile, if this happens, then that will give the RSI enough room to move back above the 30% price levels, which would give it enough room to go even lower. Right, now you get my point. So this is how you trade Nasdaq. This is how I'm going to be trading Nasdaq. Okay, speaking for myself. Alternatively, you could watch out for consolidations like this. So consolidations like this. So a move into the area of support, a good consolidation around its price levels, right, followed by a bearish breakout to the downside. Now, just because I drew this pattern like this doesn't necessarily mean price is gonna take this long to consolidate, right? It may take an hour, it may take 2 hours, it may take a few days, it may take a week, it may take a month, but the point is waiting for a consolidation like this as a sort of a bearish continuation pattern for us to go short. Now, if this happens, you want to take a trend line across the lows and you want to go short after the breakout. So you go short after the breakout and your stop loss is going to be above the consolidation list of the breakout, and you can just trail your positions to go lower at least till we get to these lows. I do think if we get this sort of pattern, then we should go as low as its price levels, which is 700 pips, as we checked at the beginning of this setup. So that's the best case scenario for Nasdaq right now. Alternatively, just to make sure I cover all bases as far as my mind can tell, so you could see something like this, a move to the downside, giving some sort of fake out. Don't jump into a sell trade opportunity here or sell trade just because you think we are going lower after taking out these lows. It means your stop loss will ideally be placed around these price levels, right? This is how I trade. Place my stop loss around swing highs, swing lows, and all that. But if you're going to be jumping at the trade here, at least where your stop loss is likely going to be, because there's a good chance we get a straight reversal to the upside, wiping out these gains, right, all the way to these highs before we give us that pattern. So something like this could also happen, right? That's why you tread carefully, no rushing, just take your time and get into those trades when you get a best opportunity with a good RR. That's risk to reward ratio for those who are asking. So that's it briefly for Nasdaq. If you have further thoughts, questions, leave them in the comment section down below. So just to go over a few charts before we move on, if you take a look at US30, which is Dow Jones, similar chart to what we have in Nasdaq, but currently we're trading around an area of value. Same thing applies. You wait for a good consolidation, right, followed by a breakout to go short. If this doesn't happen, you could see some sort of a good pullback to the upside, down, 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 then down. The point is waiting for a good consolidation that acts as some sort of a continuation pattern and continuation of this bearish move to the downside before going short. So this is a trade I was telling you about earlier on that I missed. Very good falling wedge. So we had a solid falling wedge going all the way down to the base of the channel. Now a good entry would have been after this breakout, right, going lower to this area of value, which would have brought me around 400 pips, I think. Yeah, 600 pips. I missed that totally because I was skeptical about going in on that trade. But that being said, also taking a look at US500, which is the S&P 500, you can see similar pattern, massive move to the downside, smashing these area values. So you could also wait for a retest, consolidation, followed by a bearish breakout. So this would be another good opportunity to go short. Alternatively, you could wait for extended pullback to the upside, followed by confirmations before going short. So however the chart patterns happens, as far as you do get that consolidation and a good breakout, bearish breakout afterwards, then that should be a very good opportunity to go short. So this is briefly a an overview on US30, US500 and Nasdaq. Moving on, I'm talking about GBP-USD. So GBP-USD, interesting chart. I talked about this last week, telling you exactly how price is going to bounce off of this area of value, and we did get that bounce. And I do hope you didn't jump to a sell trade here by watching that video last week. Excuse me. So right now we seem to be creating or forming some sort of inverse head and shoulder. Here being the head, this place being the left shoulder, and currently forming the right shoulder. So there's only one thing to do here, and that will be going long if we do breakouts from this area of value. So I'll be waiting for a consolidation or a move to the downside, followed by a move to the upside, taking out this neckline. So this area of value is known as the neckline for those who understand chart patterns, right? Talked about this extensively in our course. You could go check that out using the link in the description below. So inverse head and shoulder, want to go long. Immediately we get a good candle close above this area of value. Take profit target could be as high as what? Let's see. First take profit target could be as high as this price levels. So going down to the 2 hours time frame, just so we can put these charts together, right? So this looks like a very sick bullish trend, right? So you don't want to be going short on this trend or this structure. So we'll take out this area of value. First target here, second target could be as high as this price levels, and you can trade the rest of positions to go higher if we do go higher, right? But I hardly hold positions. When I go out, I just go out, take out the whole of my positions, right? Only on rare occasions I take chips off the table as we grind higher. So that's it briefly for GBP-USD. I'm not going to talk much about this. There's a good chance we may be wrong. Currency pairs can be like that sometimes. That's why I hate to trade them. Boy, I do trade them sometimes if the opportunity is enticing, like this one is currently to me. That's it briefly for GBP-USD. If you need more clarity, leave your thoughts in the comment section down below. Going long at this neckline. So for those who like to think about going short, your only reason to go short should be watching out to see if price comes into this area of value again, consolidates properly, and then gives you a good breakout to the downside. And this can be some sort of confirmation to go short, with your target being this area of value. So over here at these highs, which funny enough is going to coincide with this trend line. Solid price level to take profit if this plays out like this. Moving on, and lastly, we're talking about EUR-USD. So EUR-USD, we also talked about the possibility of price bouncing off of this area of value. That happened exactly as expected, though it gave some sort of a fake out. I know a lot of traders would have jumped in at the break of this price level thinking we're going lower, but that was a fake out. And if you can tell, you can see we had a bullish divergence, price creating lower lows and the RSI creating higher lows. So a solid bullish divergence on the 1 hour time frame should have hinted you that you shouldn't be going short. That is a good chance price reverses. So we did get a reversal, took out the resistance level of the channel or the descending channel, followed by a retesting the channel and also the area value, followed by a blow off to the upside. You can see these solid green candles, right? So this is a no-brainer for you to go long. But if you're not in on this trade yet, you could possibly wait for a reversal to the downside, a short pullback, where you could get better price entries before we explode to the upside, right? I do think this is going higher. I may be wrong, but my bet is on the fact that this is going higher. So if we get at a pullback to the downside for you to get an entry, your entry is going to be immediately after the pullback. Your stop loss can be under this low, so this gives you a tighter risk to reward ratio. So stop loss potentially is going to be around 45 pips or 40 pips. Yeah, 40 pips. Take profit target around this highs is going to be around 150 pips. So that's a risk to reward ratio of 1 to 4 approximately, or let's say 1 to 3, 3.5. Right? So this is a very good risk to reward ratio in my opinion. And if we do get a pullback to the downside, try to get in, and please do use good and solid risk money management, whichever fits your bill. That's it for this week's analysis. If you love the content, please leave your thoughts in the comment section down below and let me know what you think. If you think I'm wrong, you disagree with me, please let me know the chat you disagree with me on, and share your thoughts in the comment section down below. And lastly, if you're interested in learning to trade Forex like a professional, Want to learn to analyze the market like I do, pure price action, no noise. Just take a look at our Forex trading course on Udemy. We have over 5,000 enrolled students and tons of 5-star reviews. So go check it out. Let me know what you think. That's it from me, guys. See you next week.